So what do you think about what Larry just had? A lot of uncertainty and a danger this could really escalate out of control.
Well, I mean, I think what Larry's trying to reference is now the doctrine of unintended consequences, the trade war spilling over into potential currency war, which is then going to spill over into an investment cycle nightmare because everybody's now going to pause. It's not just the 3 weeks waiting for the president to make a decision on the tariffs, but it's over the next 6 months. Where do I go? What does it mean for my supply chain? What does it mean for my workers? And am I going to be laying people off at the end of the year? And so you've now created all this uncertainty. And I think real market participants, we're running about $10 billion at SkyBridge, know that you're getting an increase in volatility at a time when you have less liquidity in the overall markets. Just look at market movement from November of last year to today. It's gyrating 10, 15%. We're down 7 or 8% from last week. The month of May down 6.5. You go up 17 for the first 3 months, down 14.25 from November 15 to December 31st last year. And so what you're learning is that the Volcker rule has taken a lot of principal trading out of the markets, a lot of balance sheet capital. And so you're increasing volatility, increasing uncertainty. And even though the banks are very strong, David, you could have a full-blown liquidity crisis as a result of all the policy maneuverings right now.
So you're seeing the real effects in the marketplace. At the same time, there's pretty much bipartisan agreement that something needs to be done about China. If you were advising the president today, what would you advise President Trump? Because you can't make an omelet without breaking some eggs.
No, and I appreciate that. And I wrote an op-ed in the Financial Times last July, which basically restated the plan that we had in the transition, which was to team up with the Europeans and collectively bargain with the Chinese. That would have represented about 46% of the economic output, 650 million or so people. And both the Europeans and the United States have trade grievances with China that need to be resolved. And then you could have also targeted and you could have said, okay, listen, if you guys aren't going to budge, we're going to start moving tariffs. And here's the predictable glide path of our tariffs. The problem now is because there's a lot of uncertainty in the mechanisms and a lack of predictability related to the tariffs. If you're a capital manager or you're a CIO somewhere in a big corporation, you're reluctant to deploy capital because you're not exactly sure where the president or the administration's going on the tariff train. But if you said, okay, listen, here's where we are with China. Here's the asymmetry in the trade deal. If we don't right-size it over the next 24 months, here's the tariff ladder until this thing gets right-sized. That would have been way more predictable and way less volatile for markets.
So you're seeing the effects in the markets right now. What about the political effects? We do have an election coming up November of 2020. Presumably the president doesn't want to be in this situation by then. What are the risks that he could give back a lot of the advantage he had from the tax cuts, for example? As you increase the tariffs, that's going to hurt people in the real world.
Yeah, I think it's very important for people to understand that the American consumer is paying the tariff. Even with the currency devaluation, they're paying the tariff. It's a regressive tax. At the end of the day, it's a consumption tax. And so the people making under $100,000 a year are the ones that are going to be facing the maximum amount of pain, David. And so that could corrupt behavior. That could corrupt voting behavior. But if you look long term, the economic fundamentals are still quite strong. I think it would be hard-pressed to see a scenario where we go into a recession before the election. Moreover, because of the trade uncertainty now and potential currency uncertainty, and if you look at the specter of global deflation, it is likely that the Fed will cut again before the end of the year. So those things will augur well for the president.
Has the president left himself an off-ramp, or does he want an off-ramp?
Well, I mean, he's always got an off-ramp. I mean, that's the genius of the president. I mean, at the end of the day, he could make a decision here that he's going to cut a deal. He's a masterful salesman and masterful promoter. He could cut a deal and then signal to the world that it's done now. And then he's got a pretty nice story to tell, that he's fixed the trading situation in Canada and Mexico, the Chinese situation, and disposable income is up for most Americans, and people are doing better. That proverbial question, are you better off than you were 4 years ago? Most people would say yes, and I think it's a likely electoral success for him next November.